Good morning. There you go. Choppy market continues. If you look at I don't even the S&P, it's just like bouncing back and forth. We definitely do have lower highs, but whenever the sell-offs come in, there's no big sellers in there, and it pops right back up. So I think we're still range bound. More of the same. But you could see, like we used to talk about the megaphone, which would be lower lows and lower highs. But now you could see how we have higher lows and lower highs, so it's making a coiling pattern. Should break out once it goes 75%, which is pretty much right here, but we'll see. A lot of it's the U.S. dollar today, so you can see the yen got beat up, the dollar versus the yen. But it's been pretty aggressive to the upside, so needed a break. Let's go to crude. Right, put that NASDAQ back. Crude just hanging up in that higher area. That's the 4 hour. I like to use the 1 hour. It's definitely bullish. Held that initial onslaught this morning. Sellers right here. So that's a 15-minute, 5-minute. We'll see if it chops around on the NASDAQ. There's been back and forth rumors about a Greece deal. I'm pretty much yawning over all that. It's ridiculous. You were actually second place, Jerry, so sorry. I had a trade over here. I'll zoom into the 1 minute. So there was the entry and the exit. Took, kind of spiked a little higher, so would have liked to have gotten a little more out of it, but get this kind of sell off. This is where, like we talk about the classic bottom, a low, lower low, you can take trades coming out of there. To Jerry, were you doing the short-term trading on the NASDAQ or on NASDAQ? Okay. Bond market's getting beat up a little bit. Got to step out to the daily chart. It's getting down to that 126 level. It's 11 ticks away. It's a pretty ugly chart. Getting a bigger move on the Nasdaq now. This is probably more European style. So when you look at this is the classic type of trade. Go to a 5 minute, so we're comparing apples to apples. Bonds down, stocks up. That's kind of the classic type of trading where it's an asset allocation model. Typically larger pension funds, stuff like that, usually out of Europe too. Following stocks, like right now, Apple's breaking out. Go through some of the other ones. Google's been strong all day. And the Russell's been strong too, so got to see what the catalyst is going to be to get it through those. It's a pretty tough chart. But I could see on the spread chart, the S&P is way undervalued to oil, so I could definitely see a pretty decent rally in that. Basically getting us back to where we were yesterday. You can see how flat the hourly is, thus the incredible choppiness. So you just got to get in there. Buy the dips. This dip happened middle of the night, so missed that one. See on crude. Just seems like I'm kind of going through a bunch of different stocks. Kind of running out of steam up here. There's actually a bunch of gaps on the open. So with the stock market, they actually, uh, the way they put the charts on there, they show the closing price, and then you have an opening price, and there's times where there's a gap. And I've talked about that a while, and it's pretty common. I think it's 90, the studies they do, 90 something percent of the time they fill that gap. So we'll see if Apple can get, it's got another 40 cents to rally. I'm sure it'll get it done. So on the short-term trading, I'll go back to that 1 minute. On the short-term trading, um, you got to kind of stick with the system. I'm not sure. What do you? Yes, we can get trades in the middle of the night. Um, so Jerry, if you have, what is your style with the short-term trading? I'll just throw out a couple ideas out there. You can use the Bollinger Bands like we talked about. You can say if it breaks outside the Bollinger Band, when it closes back in, you'd get short. Took about 2 points heat to make 2 or 3. Same thing here. You get short. Did not close outside. Closes outside. Closes back inside. Short at 12. Basically right here. This one might be tougher. Big push up on Apple, about ready to cover its gap. 8 more cents. Should drive this higher. It's definitely a contrarian strategy. You could also be more aggressive on that and just say if it touches it, and then take your quick profit. You also might want to wait for, go to a higher time frame. And wait for the market to be flatter. And then you could be contrarian that way. You might have to wait for the volatility to drop middle of the day for that. Let's go back to crude. It looks like it's starting to get getting a bigger move. Yep, there goes Apple. Closed the gap from overnight. Get that last push on the NASDAQ. This kind of straight up rally. I mean, you could see where we bought, got out. It came in a little bit, but then just kept taking off. That's a short rally, short covering rally. That's not some guy saying, well, I decide I want to be long today. And they're buying it after almost a 30-point up move. They're still buying it here in a breakout. We'll see if the NASDAQ runs into some tiredness up here. Especially if it hits that band at 18. Another push up on crude. Boy, that is the Widowmaker today. Guys that bought on that breakout got destroyed. Then they started to short and they got destroyed. Same thing here, shorting. This candle was very weird. I think it's funny how that Apple got to fill that gap, and now you look at the Nasdaq's just kind of hanging. On the 1 minutes even. Yeah, I like that, Jerry. Right now, looking on the 5 minute, that was the first impulse move and the breakout, and then on the 1 minute, it's like the one, two, third move. Now we're retracing back. It's kind of backing and filling. Could probably go down to 08. Put the 1 minute up. So as I look within the components of Apple, sold off a little heavier now. Google's strong. So is Oracle. So is Microsoft. Even oil seems extended on the oil stocks. Crude keeps on going. Let's see where we're at. See, it is Eduardo. Is that the you trade in the S&P? Okay. All right, we're coming back down almost to that 08, although it's almost a point off just between the futures and this. Not even 3/4 of a point. You could even see on oil, like I was saying, how the oil stocks, it pushed to a new high. The oil stocks actually broke to their bottom end of the range, like ExxonMobil, XOM. Now you see crude oil coming in. Funny how that works, huh? Basically, there's a lot of firms that arbitrage that. I know when I had my hedge fund, I would do baskets of stocks and then I would hedge it with the NASDAQ futures or the NASDAQ, the ETF. So if you buy, um, back then I traded actually Sienna Corp was kind of my go-to stock in JDSU back in the day. And then if I had maybe 3 or 4 positions on, sometimes you got in, let's say you had a pullback and you got in, and then the market seemed to get back to your price. And if you had better stocks, they actually would, sometimes you'd enter here, let's say the stocks, the NASDAQ go up, your stocks would go up, the NASDAQ would come back to your entry price, your stocks would still be up. NASDAQ goes up. NASDAQ now is below where you entered. Now your stocks are break even, so that's good that you picked a good stock. But if I saw this type of pattern breaking before that, I would just get short right here. It breaks down, I'd cover, make that amount of money to cover my possible stock losses. And then when it bounced back, I'm still long the stock the whole time. So that's an arbitrage strategy that typically goes on between stocks and the ETFs and the future. So this oil one is kind of the opposite. The stocks went down, although that might be, I don't know, news related. I'm not following the news too much, but on Exxon, let me look at Chevron. I know there was news there. Sloppy chart, about the same. Maybe a little, it's got a higher low, so it's a little better. But basically, since the open, those stocks, which is the open is right 1330. So this was the open of the stock market. Oil stocks are down since the open. So there's a little bit of just about a 30, 40 cent disconnect here. See if the futures can win out. Now we got that bigger NASDAQ sell-off. Let me go back to NASDAQ stocks. Wow, Google's right at the high. Apple's just mirroring the index. So what you're doing is looking for an edge. I think that the stock behavior is going to keep the NASDAQ hanging in there. It's definitely hanging in there. On these kind of pullbacks, it's you could see on the 5 minute had a 5 minute sell. It's gotten a little bit heavier, but then a 1 minute buy. So you're fighting two time frames. I would call that no man's land. The higher time frame is stronger, so can this bounce up to here? Sure, but let me look at the 15 minute. It's right in the middle. Back to the 5 minute. Yep, just backing and filling. On crude. So the next actionable spot would probably be somewhere, well, let's see if it holds around here, 60.83. I think that's for a combine. I think that's a good place to stop up 320. You just got to keep collecting a little profit, little profit, little profit. I know in the past you had the ability to have many consecutive winning days in a row. That's really the way to do it. And then in your down days, if you keep them tiny, then you're going to be a net profitable trader. There's no doubt. So let's see. See how the 5 minute weighed down on that? So if I want to get long, I'd wait for down in here. But even that would be down around here. Still no man's land. This great area, this great area, great area. Not bad, but we got down sloping. Actually, the 15 minutes down sloping too. I'll leave that up. It's about catching that opening move, you know. Tomorrow I'd like to maybe try and either get in and re-trigger or do a 2 lot, let one out, break even on the second, and let the second one go for the, realistically, you've got the first sell off, the second sell off, the third sell off, so you'd probably start to get out up here. At 16 points extra. So that's the ideal type of trade that you would do. Scale in, enter, scale out one, scale out another, even on these spikes maybe. Chip away. Let's see here. Let's go back and take a look at the bond market. It's making a push lower, so we're starting to get a little bit of a bounce. Same thing with that asset allocation model. So here's 05 basically. Here's 05's a 1 point higher. But look at the difference. So that's the first bar. That's the second bar. Look at the difference. Bullish divergence. That's the tick range chart. You can see it looks blocky. Excuse me, blocky. Every single candle is the same. The high and the low is the same amount. There's no time involved, although they do put timestamps when the bar actually changes, but theoretically I've seen it sit there for a long time and not make a new bar. Another extra tool. Pretty decent rally. It's 6 points off the low there. The longer it stays up here, the better it is. Just it shows an equilibrium point. So if we can keep it drifting higher. Let's see if that gives a buy. Let's go back and look. 45.11. 1, 2, 3. That day there's 3, 4, 5, 6, 7, 8, 9, 10. 10 of the last 13 days we've traded this price. And then obviously traded here on that breakout and it failed. So from a inventory standpoint, break out to new highs, came in deeper, got back and tested those old highs, shallower pullback, tested those old highs, shallower pullback, testing the highs again. This thing's, when this breaks out, it's going to, it's off the chart. 46 something. 46.60. 160 points higher. As long as this price action keeps up. Not sure what the catalyst in the middle of the summer would be for that, so maybe it's got to hang here longer. When you see this kind of chart, the down, up, down, up, down, if you could come away with a winning day on a chart like that, that's a huge winning day. So I know guys that would be at a trading firm would get chopped up on a day like this. Now it's almost like you got to protect your lead, you know. Maybe try and be patient and wait for another another good area. Maybe down here. Looks like oil's trying to come back down to the oil stocks. Wait and see. Some people lately, I don't know what if you accidentally hit it, but I'm sure you have your trading enabled, and then this box will turn green, the signals box. And I guess if you're manually trading or don't want the signals, you can manually trade and take signals at the same time, but if you want to block it, like you're going to trade crude, a signal will come, it will show up in here, but it will not be, it will not go to the market. The back and fill market. fill, back and fill. Probably the time now, Jerry, if you wanted to do your once it gets quieter, your short term. Let me get the 1 minute chart. See if it holds in this range. Probably start to look to maybe buy at like 06, 05. Same price, bullish divergence still. Now I've tested that, hit that 04 half. If you were bought at 05, you saw one at 06. If you're long at 06, see how it plays out. Definitely now your stop will be 04. Seems to be hanging in there. A lot of times it come back, re-trigger, you could buy back in. Kind of work around a pivot point. Right now it's roughly around 05. Starting to get it to turn here. I think it's going to pop. You mean 05 half? Okay. Got 2 on, I'd take 1 off. 7. Now you got yourself a free trade. Maybe get one more push. If we need to turn and take out that 775 again, you're golden. It's just so dead. It's so flat. Look at the 5 minute. Let's see if we can get in one more push higher. It's struggling at that this spot right here, so I don't know. Should probably offer one out at '07. Even, that's too late. So you can see the ebb and flow. It's gone to 7, back to 5, back to 7, back to 5. So if you'd sold one, bought one back, sold one, bought one back, you'd actually have a better cost basis, and you're making profits, and you could hang on longer. So that's kind of the idea when you're doing it, especially if you're doing, in your case, you have two on. And what happens is, you maybe catch a couple cycles. Um, occasionally if it even spiked up more, you'd sell it, and then it comes down and breaks down, and you actually say, okay, I'm not going to buy it because it's just this thing should be trading at '09s up here. Going nowhere fast, huh? It's definitely, we used to call it breaking rocks. It's definitely takes a particular mindset. The guys that were scalpers would be like, "You guys are crazy buying and holding something for hours." Really needs a hold in here. It could break to another new level, but let's look at, wait, go back to that. You made a lower low. It's kind of a conflicted. This is a not a bullish divergence, but this is, so it's got to hold 3.5. It should. I think the best bet is just if you're going to do that type of strategy, it's get in there and make a lot of little profits. So, but you'll see as it overcomes waves of selling that came in there, if once those sellers are done, this will pop up. Now, where does it come from? You know, this comes from the more buyers and sellers, or in the other, if it's going down, it's more sellers than buyers. It's just pure. Kind of seems more bearish lately. The Nasdaq got Apple breaking down a little bit, and you've got just these. This lower highs is not good. All right, we'll see you in the wrap-up call. We'll see if we can get back down over here for a long. Thanks.